Appreciate everybody being here with me this afternoon. Let's get started. My name is Michael, and I am one of the reasons why there's a Back to the Future Trading, having co-founded this with my partner and best friend, Mr. Ron Gardner, back in 2008 and 2009. We have a pretty unique theory when it comes to market movements in relation to everything everybody else is preaching out there. And the long and the short of it really boils down to time. We're one of the only companies that is looking at markets proactively versus reactively. And so we believe via numerous paths, you can know with a statistical edge whether a market will go up or down at a certain point in the future. Now, there's two different schools of thought with regards to time-based signals. The first, the easiest to accept, is the premise that there are a number of ultra powerful financial players, companies, entities, multinational corporations such as JP Morgan, Deutsche Bank, Credit Suisse, fill in the blank on down the line. And in the first theory, these very powerful players follow a time-based procedure throughout each day. More so, they manipulate things like news and reports and other manipulatable mechanisms to trip people's stops out and create pockets of liquidity at key times. And there is sufficient evidence to support this. I'm not even trying hard when I suggest this as a theory. There's a deeper well, fathoms of depth, an ocean, in the second category, which suggests, per men like William Delbert Gann, that even the banks are subject to rhythmical procedure, meaning that markets, like society, like civilizations, have a heartbeat of sorts, a rhythm or a cadence. And if we simply look for evidence of that, traders, banks, world players are sort of following a script that was written before the dawn of time. That one's a little more difficult to walk through. So let's stay on side A. Can you guys hear me okay? Is the sound back? Testing 1, 2, 3, 4. Okay, cool. So one of the ways that we do that, and it's actually, I think it's pretty cool, is we give people access that come to the website and take the video demo, access to 2 days worth of predictive timing signals before we get to the webinar. This is a trial of sorts, right? But it's a different kind of trial. And the premise of the program is that when we get to this time in the future, remember these times were given out Tuesday before Wednesday and Thursday. And when we are looking at those times on Tuesday, this is, for all intents and purposes, a ludicrous proposition, Michael. It's insane to think, if you don't believe what we believe, that this is possible. And so you're now, by denying the reality of what we're about to see, sort of in a giant corral filled with 90% of traders who insist that you must look at trend lines, you must look at support and resistance levels, usually theirs, You must look at price action. You must look at TPO charts and volume spread analysis. You must look at candle patterns, and on and on and on and on the list goes. So when we're looking at these signals, we're trying to ascertain basically a premise. Is it true or not? Meaning, as of Tuesday, we were waiting for moves down at 3:30 Eastern, 5:30, 8:25, 11:05, 12:50, 2:05, and 3:40. Okay. And as of Tuesday, we were waiting for pushes up at 2:50, 4:45, 6:40, 8:45, 11:30, 1:45, and 2:40. Not only were we watching for that, but we were looking at 3-minute signals, oil signals, gold signals, DAX, Euro currency, mini Dow, mini NASDAQ, Euro dollar, pound dollar, Ethereum. Michael, we've kind of put it all out there, haven't we? Whether you believe in school of thought A or school of thought B, we're now sort of coming out of light speed and looking at what actually took place. Remember, this chart was available 4 days ago. So Thursday, Wednesday, Tuesday, by Monday, Leroy, this was carved in stone, which is kind of bananas. So first thing we're going to do is just validate that the times that we're watching for are the times that are on my chart. And so if you'll indulge me here just one moment, 5:30, 5:30, 6:40, 6:40, 8:25, 8:25, 8:45, 8:45. Michael, would you concede that the times that have been available for 4 days are reflected on the actual chart that took place today? Pound for pound, dollar for dollar, signal for signal, 205, 205, 340, 340, 1250, 1250. Yeah, so that poses a problem. It poses a problem because I've removed the bricks of vendor manipulation. So here forward, I have no influence. I can't prop up my guru powers. I'm an insignificant part of this demonstration at this point for the next few minutes, because all I'm doing is comparing, like you, what actually happened at those times. So thank you for that acknowledgement. Let's come down and look at the actual chart and see what the heck we're doing here. Market's been falling, and if we come out and look all the way up to a daily chart using the settings that I use on the E-mini S&P daily, I want to be consistent week to week. The forecasts have essentially, on the default signals, been pretty much spot on, but I wanted you to see the other settings, the ones that we use that are slightly modified for the one chart we're about to take a look at. And for some reason, NinjaTrader is slow with that data after hours. Hang on one second. Okay, shall we try again? Let's stick with what we got first before we crash the computer. So what we've got off the bat are signals. And there's a difference between the signals and the setup. But Michael, first examination, close look here. We're trying to get a sense for whether or not the signals did what we expected them to when we arrived at those times, right? And so if you give me a little bit of rope here, is it fair to say that where I've drawn my arrows, like at 240, 93.25, we came all the way up to 6,000 straight up off of there. But at 145, we didn't go up, we went down. And then at 205, we came from 94 down to 87. So if it's a 5-7 point move, I'm going to kind of say we were in the ballpark. 1105 did not. 1130 did not. And so we're in sort of this 6 out of 10, 7 out of 10 region of signal accuracy. Now hold on, we're going to come back and look at a setup in a second. I want to scroll backwards and look at yesterday, because I gave you the signals for yesterday and today 4 days ago. And when we do that, we're sort of seeing those same things, right, Michael? About 6 out of 10 times, the signal is doing what we expect it to do and appearing near actual highs and lows. Is that a fair statement, or are you guys catching me in a lie right now? Can I say about 6 times out of 10 it's fair? Okay, cool. Just to show you, I'm going to go backwards in time a little bit more, and I want you to see what happened the day before that. This was Tuesday. Then I'm going to go back the day before that. This was Monday. So generally speaking, 4 days in a row now, when we arrive at those prediction times, the market is going up or going down reliably in that 6 out of 10 window. Okay, now we're going back through Thursday of last week, onwards and onwards. So it's pretty bananas that any of the signals, when we arrive at those times, Michael, are going up or going down at all. So we kind of have a problem here, right? We kind of have a problem. And the problem is that, wow, this thing is kind of predictable after all. So if we come down out of that, we'll come back and look at this in a moment. I want you to see that it wasn't exclusive to the E-mini S&P. This was oil today. Oil had an inventory report at 11 o'clock, right? You can see evidence of that report today, 11 o'clock Eastern. There's the report. And so up till then, the guidance from the Times were warning us about a down move at 7:36, an up move at 8:03, a down move at 8:36, an up move at 8:54, and then a down move at 9:06. A failure at the 9:30 signal, a down move at 10:03, and then right before the report, no bueno, and then down from 11:21 to 1:06. That's pretty cool. And then before that, yesterday for oil was this. And to me, this is insanity. To me, this is insanity. Because some of these signals are putting us in positions of $1,000 movement. We can come and look at gold. I just want to look at a few markets together before we drill down into how I would have you trade them, or how you might consider trading them. And these were the 5-minute signals, 5, not 3, were the predictions for gold futures today. And these are, again, from the times that those people taking the trial took the trial. And so right off the bat, we start to notice that these windows are kind of putting us in positions where the market starts moving in our direction enough to get to a break-even condition, right? And it wasn't just today. There's yesterday. Okay. So let's take a look at one more. The NQ. And then for good measure, we'll take a look at the forex pairs as well. I just want to get an overall sense with you if the prediction times are actually working or not. NQ on a 1-minute chart. Here's the pre-market. Michael, it seems entirely obvious to me that in the pre-market signals, it went up at 6:15 and 6:39. It went down at 7 o'clock and 6:30. Then things get a little wonky right before the open and the unemployment report. But here's what's curious to me. There's unemployment, 8:30. At 8:36, we were expecting an up move until when? Until 8:49. And then we were expecting a down move from 8:49 until 8:58. 9:04 doesn't work. 9:13 is only one bar. It finishes where it started. Down at 9:17, Michael, watch. Up at 9:30, down at 9:43. Up at 9:57. Then you have a bunch of signals back to back here, but look in the middle of those back to back signals. Look where 10:13 lands, and then look where 10:14 lands. $10.18 doesn't work, but $10.20 does. So this is an insane market. Hey, Joe. Joe had a great question. Today I've spoke with my wife and I said, hey, can I be brisk and rough with people? And she said, absolutely. I was like, okay. So I'm going to keep an open mind here today. And I'm going to answer every question enthusiastically, because lately I've been grumpy. I don't know if you've noticed. Larger time frames should have better results than with larger profits than with the 5-minute chart. Profits would be small after paying spread costs. Not true, but okay. Every time you go into a trade, you're paying spread cost. With the US market and futures, you know your cost. And with these signals, Joe, you're getting them with limit orders. I'm not hitting market. We know exactly when the candle's closing. So you're not hitting market orders, so there's no slippage per se. Also, the system works with 1 hour, 30-minute, 15-minute signals. I can look for time signals on any time chart. Why would I show the signals on a smaller time frame, do you think? Let me ask you a question. If I have Michael's attention for 60 minutes, is he going to be more impressed if 6 out of 10 signals in 30 forecasts work, or if I gave him 4 forecasts for 2 days worth of signals on an hour chart and one of them worked? Do I have a better chance convincing somebody if we were looking at 1 hour signals or 5-minute signals? What do you think? If I can show him that the system worked on a 1-minute NASDAQ chart, do you think I got a better chance convincing him it works on a 1 hour time frame? What do you think? Yeah. So recognize my struggle is 95% of people who come here no matter what I show them, won't believe it. So the 5 to 10% who might, I have to give them overwhelming evidence that the thing they're hoping is real is real. So I can flip a coin once or twice or 3 times, or I can flip it 100 times. And if I flip it the 100 times, I have a better chance. I have a larger data set to convince somebody. So you're right. You can use a 60-minute chart. You can use a 15-minute chart. The signal accuracy is the same though. I can go all the way out to a daily chart, and the signal accuracy is the same. So Joe, if I covered this up in the corner and I told you this was a 1-minute NQ chart, does it look the same as the 1-minute NQ chart we were looking at a moment ago in terms of where the signals went down and where the signals went up? Yeah. And then the same added benefit of I can see the signals coming up in the future. I have, this is a true story. I told it this morning in my class. I have someone that I usually go right after working with NinjaTrader live, and they do market analysis with people in their segment of the show. And Joe, I gave that person the 3 upcoming forecasts for gold on a daily chart. At the time of the email, we were right here. And on his chart, he had a forecast for the 3rd, the 15th, and the 5th. I can show you the email if you want to see it. And I said, Mr. So-and-so, I believe in this so much. I hear you talking about a gold chart, an analysis on gold in NinjaTrader Live. I have the next 3 dates and directions for you. No response. All 3 dates go by, no phone calls, no texts, no emails, no carrier pigeons, nothing. Nothing. 6 out of 10 signals are near the bottom or the top of the move. This is someone who trades professionally, has a segment in Fox Business News, all 3 of the last moves, nothing. So what I've learned as a result is that the people that understand this is happening, they find us, and they go, wow, holy cow. The thing that I suspected of being true is actually true. Nope, let me go on the right contract here, ESDEC 24. So Joe, that's standard signals on a daily chart, but it's the same as a 1 or a 3 or a 5 or a 15. The computer program is looking through, the historical data to find these patterns. And so the same way I was able to give people those signals in advance for gold or for the 3 or the 5, it works on the higher time frames as well. In fact, I'm a huge proponent of the 60 on the E-mini S&P. Huge. It's huge. And Joe, when I have a gap between signals like this one, I teach the customers to use what I call splits, to look in between the signals to expect what was coming. So when I have a large gap in between 2 signals, Joe, that's what I teach them to look for. So of course, it's as accurate on a 60 or a 15 or a 30 as it is on a 3. But I only have an hour to convince somebody that it's working. And so on a 5, now we have our work cut out for us. Does that make sense? How do I trade it? Ready? Here we go. I'm using a 120 period moving average. EMA, not SMA. That was a great question, by the way. Thank you for it. The nice part about the software, Joe, is that everybody finds their way. If you trade a certain way, you can trade a certain way. If somebody's trading on a 30-second ES chart, God bless them. There's room for everybody under this umbrella. The banks don't care how you take their money from them. 120 EMA. When I'm above the moving average at 250, I go long. At the close of the candle, my stop is 1.5 ATR values away. I get out at 330 plus 5. 445, the close of the candle, I get in, I get out by 330, I give back a tick. 640, above the moving average, I'm in until 825. I take $3 out. 845, below the moving average, it closes above right here, Joe. And then I put my stop right underneath that candle that crosses above the moving average. It's called a crossover trade. And I give back $4. Right here at 1105, I'm short, and now I'm out. I give away $4.50. Right here at 1250, if you trade during lunchtime, I gave away $11. At 205, short, out at 240, I gave away $3. And now, from 340 until the most recent signal, we take back 7. Those are the signals with trend. Those are the signals with trend. We now have what are called the punctures. A puncture says this: if I have a stop level that is counter trend, I'm watching for a breakout above it. And if I get a breakout above it, I put my stop right under the candle that broke through it. And then when I have signals that break down through the stop level, I go short this way. So I'm just going to put an arrow by all of those places where those punctures took place. And this week on the ES 5-minute, we had a loss there. Then we had a breakdown. It came up and hit the original stop. And then it broke down a second time and finished lower, giving us $5 back. Then it came through the white line here, and we exit at 1250, getting 19 of it back. Then it broke through the white line here, and we got 8 of it back. So quick review: 7, 8, 13, 14, 24, 32, let's call it 39, average 40, minus 3, 37, 27, 26, minus 4 is 22, 21, 17, minus 4 is 13, minus 2 is 11. Let's call it at the end of the day plus $10, or about $500 per contract. And this is hypothetical, right? Plus $10, about $500 per contract, hypothetical, using the signals in the form of a setup. So Michael, over here, there's a guide as to how we can trade these signals with trend. So from the London to the US session, plus 500. Now, as you go back, this was yesterday. We can see that those signals with trend are also here. Long at 11.10, out at 11.55. That's a $10 move. This guy here, when it crosses above the moving average at first, is stopped out -4. The 5.55 signal is +5. It comes below, comes below, comes below, crosses above the moving average again at 8.25. Our stop is right below, out at 8.40, +21. Signal with trend at 9.50, just before the report, we give back 10 of the 20. Then we called the 10.50 here. It doesn't breach the blue line. Long at 145 until 150, plus $2.50. Long at 210, it hits the stop line, -6. It's the end of the day at that point. So 26, 36, 37, 38, 32, 22, 21, -4 is +17. So a slightly better day yesterday. That's about $850 per contract. See, when we're trading in the direction of the trend, it makes it a lot easier, I think. We already know when the times are coming. So 8:20 this morning. Is it this morning? Well, let's just follow the rules. Ready? Long out by 9:20. That's plus 3.7. Below the moving average, close above, stop below the candle, -3.9. Puncture trade, all the way down, comes all the way back up, takes out the stop, -2.9. Now, short at 11.05 until 12.10 is +19. So here you've basically got $400 and $2,000 -300 and 400. If you continue, the next signal was a short from 145 until 345. Let me increase the font on here. If it's too small for me, it's definitely too small for you. There we go. So trading with the trend, if I know the times in advance, Joe, I have to wait until I get to the signal. But then I know exactly what to do and how big my risk is. So 370, 20 is 2,000 plus 600. That's about $3,000 minus 300 is 2,700, $2,300. Let's call it a $2,000 day in gold. Now remember, you knew what times to wait for the signals. You knew what direction those signals were supposed to go. You had an action plan before the trade arrived. You know your risk before you get there. And you can't overtrade because there's only so many signal times, right? Same deal here with gold. If you went out to a daily time frame, the method stays the same. Michael had a great question. Mike, I'm going to get to it here in a minute. He said, are there any markets that work better than any other markets? No. That's the great part about time. It's market agnostic. Time is market agnostic. Everything works equally. That's why we give such a wide swath of signals away, up to and including currency pairs and Ethereum. So let's go ahead and look at the Euro US dollar, right? That's a weird guy. Most of you are futures traders. Michael, did the Euro US dollar behave as predictably, less predictably, or no different from any of the other markets? That's the daily chart. But still, we'll go down to the 5-minute. Is it kind of weird to know that the euro dollar goes up and down on key dates at least 5 to 6 times out of 10 predicted? Kind of weird. Here's the 5-minute chart. Kind of the same. Yes, when the lines are super close together like that, it's a predictor of chop, and the customers that use it won't trade during that choppy section. They'll wait till the market comes out of the chop. So here's the euro dollar for today, and here it is for yesterday. That's the same as the other markets. GBP USD, hooked on phonics, worked for me. That's the Great British Pound US dollar. And so, Mike, if I shrink it up again, come on now. I have the signals from today, and I already have the signals from tomorrow. The only reason you would believe me about the signals from tomorrow is I already gave you the signals for today 2 days ago. 10:35, 10:35, 12 o'clock, 12 o'clock, 8:35, 8:35, 5:45, 5:45, 3:40, 3:40. So you have to believe everything else I say, because everything I gave you up till now was predicted by the same tool. So these times on the right, they don't disappear, reappear, repaint. All right, you don't have to take my master class for $28,000. Got to come to West Palm Beach for a weekend and sell your car for the platinum course. And again, speaking back to Joe, look at the 60-minute instead of the 5 if you like the higher time frame. It's the same stuff, right? Where would you go long? Where would you go short? You could go long at 7 o'clock with a stop right below this candle, Michael. This called an aggressive counter trend, and got into here. It never goes through the blue line. Then from here to here is a stop out. Now you're short from 10 o'clock to 12 o'clock. We'll put an arrow there. Now you're short when it punctures the white line right here from 1 o'clock until 11 o'clock. Now, Joe, you're short from 11 o'clock until 8 o'clock. Now you're short here until 7 p.m. 7 p.m. you lose a little bit, but you don't hit the stop. Here it punctures, then you have a small loss. Short from 12 o'clock to 11 o'clock at night, short from here to here, and now short from 11 o'clock until there. So Joe can trade the higher time frame, Mike can trade the lower time frame. So Joe, if you don't have NinjaTrader, I'm using actually an unlicensed version right now. This is free. There are a couple ways to get the data. Right now, I'm powering all of my data from a third-party data source called Kinetic. And so you can get all of the data you need for NinjaTrader without being a subscriber. If you trade futures, the best way, the least expensive way, in my opinion, is to wait for the sale. There's an 80% off right now. And you can go to any one of the funded trading accounts. So for example, you could get a $50,000 Apex account over here, or a 25K account, and you see where it says 147 a month. They have an 80% off coupon. So let's say it's 150 times 0.2. You pay $30 a month for the Apex data, and you'll have all of the futures data. So that's another way to get the data. The third way I'm aware of right now, there are APIs available for NinjaTrader. One of them is interactive brokers. So if you have interactive brokers, you can get data for NinjaTrader, just connect the two accounts. So those are the ways that you can get third-party data for it. Great. And then lastly, let's see if I can connect Coinbase. This is Bitcoin on a 60-minute time frame. Michael, could you have known what dates to buy Bitcoin and what dates to exit? When's the next good date? When's the next good time to buy Bitcoin? 4 a.m. on this morning, 4 a.m. tomorrow. And then you can go all the way out to a daily time frame if you're a big baller. When was the last time we told you to buy on Bitcoin? If you're following my social media, it was November 4th. There was a signal right here, Michael, for Bitcoin on November 4th. When did it say to get out? November 12th. When's the next day? Friday the 15th until Friday the 29th. We gave you guys the prediction times for Ethereum, I think, on a 5-minute chart. Mike, is that in our 60 to 70% window of accuracy? Could you have sold Ethereum short and gotten out at 1020? Yeah, right. So whatever the time frame, here's Ethereum on a 1 hour for Joe's approach. Here's Bitcoin on a 1 hour chart. Same accuracy level. Scrunch it up. You see how far back we go. And now here's the edge. What do I have that no one else has? I have this, and this, and this, and this, and this. And Joe, if you want to find some more signals, you can go like that. Because there's an uptime here and a downtime there. Elon Musk is part of some government agency, predicted. Well, how can you predict something that hasn't happened yet? Now you're in category B. Now you're in category B, where we talk about pre-will versus predestination. Pretty heady stuff. How can we talk about stuff that hasn't happened yet, but is going to happen? One of the greatest, obviously, they called him a wise man. King Solomon said, everything that has ever happened will happen again. There's nothing new under the sun. That's some pretty philosophical stuff, right? Mark Twain said, history doesn't repeat, but it rhymes. Meaning we can kind of anticipate what's going to happen next. World War II was probably not the last world war. Agreed? Some would argue that we're on the doorstep of number 3 right now, if it's not already started. So when it comes to markets, though, people are extremely reticent to think that these moves are predictable, right? Well, what am I going to do with my CCI? What am I going to do with my Bollinger Bands? And I see a chart here that on what is supposed to be an unregulated open source currency of the people, I see a very predictable instrument doing what it was intended to do or was anticipated to do at these times 6, 7 times out of 10, right? And so the great mystery is, why aren't people using this, whether, like Joe said, on a 60, on a 30, on a 15, it doesn't matter. You can use it on any of them. The point of it is, when those times arrive, do you want to know or do you not want to know? A lot of people hit this obstruction right now. So many customers that are watching this, and they've told me this later, they get hung up on the fact that it's a different platform, right? It's sort of like saying, I have a life-saving drug and it's in a blue bottle. And somebody says, well, can you put it in a pink bottle? I really like pink. Ooh, you can't put the life-saving drug in the pink bottle? Yeah, I don't want it. I only take life-saving drugs from blue bottles. It sounds ridiculous. And it kind of is. Use the platform you use because that was what you found at the time. And we get locked into behavior patterns. Marketers are notorious for locking us into a behavior pattern. Free trial for 90 days, free this, free that, free live trade room. And somehow every company I ever did business with that had a free something, I ended up spending thousands of dollars with. It's interesting how that works, isn't it? And so it's beyond the conception of some people that these very powerful people, Jamie Dimon at JP Morgan, could behave in a way that creates pools of liquidity. And it's just interesting here, if you look at this chart, look, you can see where they're running the stops. Like, Michael, can you see here how it was supposed to go down Bitcoin from 545 until 11 o'clock? What are they doing up here, Joe? There's the first stop run. There's the second stop run. This is called liquidity. They're creating liquidity. They did it over here too. Joe, look, there's the prior swing low. And right before the buy time, what do, Mike? They push it down below the low and then they run it up. And all the retail traders are on the wrong side of it. They did the same thing over here at 11 o'clock. They're going after the stops. Yeah, Joe, see it here? The biggest swing low is right there. What do they do before 11 o'clock? They create another pocket of liquidity. So if you're, the cost of not having the software, here's an evasive answer, Joe. I'm going to get to the cost here. We're almost at the end of the webinar. The cost of not having the software is falling backwards into the good graces of geopolitical financing operations like BlackRock and Vanguard and JP Morgan, and trusting that they'll play fair. The cost of not owning the software is being subservient to your fight or flight response, your self-destructive tendencies, your self-sabotaging message system, which prevents you from doing what you should and makes you do what you shouldn't. The cost of not owning the software is over trading day after day, getting in too late, getting in too early, giving your stops too much room for your losers, and not letting your winners run because you have no idea how long the move is supposed to last. So yeah, I'll get you the actual cost here. If you can hang on about 5 more minutes, we're almost in the end. Any questions about this? Just a quick run through the other markets that we had signals for. Here was the Dow yesterday and today. Just a quick look, very similar to the ES on the 3-minute chart. Then we have the Euro currency, the 6E. Haven't loaded data for that in a while, but if you look at the 6E, again, just to give you that perspective of what happened at the times we were waiting for versus what we were expecting to have happen, we can get a good perspective on that. There is an interesting perspective for those of you that like to look for the high or the low. Mike, I want to suggest this to you. When we're under the moving average, the very first time that the selling stop is hit, yeah, Chris, no problem. This is a place that the trend is likely to reverse and go up. The first time that the sellers don't show up at a time they were expected to can be a change of trend reversal there. And then you can see here, we break through that blue line. And then right here, Joe, do you see where it breaks the stop line for the white signal? Right there is a signal that there are no more buyers left. And the people who were supposed to be here at 11:54 just left the party early. So you can actually use this to track the trend with and pick a high or low. Okay, what else did we have? We did oil, we did Ethereum, we did gold, we did the S&P, we did the NASDAQ. Okay, we covered through most of those. Let's take a look. Chris had asked, can we look at the ES, the gold, and the oil on the daily chart? Yeah, let's take a peek at those. Thanks for asking about that. And we'll just do a quick run through. Here's gold on the daily chart. We'll come through, and Chris, we'll take a look at some things that are probably worth concern. Right over here, I work with a customer who trades gold, and we were looking at this the other day. Chris, can you see the signal back on July 2nd? When we had that signal, you notice how it started to degrade, and it didn't really go up at all. Okay, that's a good word that I want to start using more. Degrade. It just sort of got limp, and it was time for the buyers to show up, and they didn't show up. And you're going to see opportunities like that, where when you get to a time that was supposed to go up and it doesn't, it's sort of like the car running out of steam. So coming into the following moves, when the buying time was weak, Joe, that's the time to pounce on the selling time. We came all the way down until August 5th. It did come up, but it didn't make a higher high. And in fact, by the time we got to August 26th, it was an even lower high. So Chris, we can interpret this as weakness. It's just getting lower and lower and lower. And so for me, that would be a huge opportunity to sell. And now we can see that in reverse. I'm going to show you this as we move into the current because there's an interesting thing happening right now. I mentioned this to our customers in the training room when it happened between September 5th, and this is on our Instagram and YouTube and TikTok channel too, if you want to go back and verify this. Can you see here, Mike, how we finished exactly where we started between the 5th and the 13th? Chris, that's also a sign of weakness, but now from the selling side. And so that we actually called that in the advanced training room and told people to look for a move up from the 13th until the 3rd. Now, there's a phenomenon. There's a phenomenon in time. Is it okay if I get a little advanced here, everybody? I know we don't usually do this at the end of the webinar, but if you're up for it, I can teach you something real quick. Okay. There's a phenomenon in time known as reverse polarity. And what I've been able to discern, and I've given these training videos to the customers. Okay. Yeah, let's do a new. Time exists as a primary waveform, but then, Michael, there's an equal and opposite waveform. Everything in life is vibration, energy, down to solid matter. Einstein says, when you see something, you're looking at a particle and a wave. Nikola Tesla says, if you want to understand the secrets of the universe, think in terms of frequency and vibration. Well, what happens is near a trend reversal, the signal polarity starts to switch. So you've got this equal and opposite wave pattern here, Mike, right? Right, Chris? And what will happen is that you'll be going along as normal. You'll be following the primary wave up and down. And then, Mike, you get to a signal where it jumps ship. And the signals behave at the right time, but in the opposite direction for a while. And then they go back to nominal or normal. So, Chris, when we look at gold, there's a couple things that we can point to that are telling us that might be happening. Let me explain. You'll notice that when we got to the 3rd of October, Chris, the market went up, right? Up, up. That's the dominant direction. That's the first cue that I have that we've jumped to the opposite polarity. This is oil. Okay, sorry, we'll go look at CL. Thank you, Mary. Keeping me honest here. It doesn't matter. We'll go look at gold. You'll see the same things. But Mary, when that first signal starts to go in the wrong direction, and with the PVT, we would have seen buying volume at a selling signal per the class earlier. But it's a signal, Chris, that the cycles are reversing, and we're in that sequence where that stuff happens. It's not a one-off. It happens 1, 2, 3, 4, 5, 6 times, and then it drops away. So, Chris, the second thing I can do is connect these 2 times with a split. And to see or identify what the polarity is, there are only 2 solutions. Solution A is nominal. And Chris, that one doesn't make much sense because we went up at the red and down at the green. The backwards solution, or the inverted reverse polarity solution, is the best fit. So we had an up signal followed by a down signal, followed by an up signal, followed by a down signal. Let's draw it with the arrow just to stay consistent. followed by an up signal, Chris, followed by a down signal. Whoops, sorry. Now, where are we right now in the sequence? Chris, where are we in the sequence? It's still reverse polarity, right? Yeah, we're at an up node. Now, when that signal occurs, we actually have a page in our training booklet. When that signal appears where it is, I don't know which side of the moving average are we on. It started happening as we were moving up into a high. So when you're moving up into a high, Chris, we now watch two things. We watch an emerging trend line below and the cap off or the high. So for us on gold now, the two most important levels are here and then arguably here. We actually have 3 touches along there. So Chris, if it closes above this line, we usually go 200% of this distance. If it closes below this line, we're expecting 100 and 200% below. And that's called a trigger line. Whenever we close above or below these lines, the polarity goes back to normal. And right now it's not normal. It's backwards. Chris, does that make sense? Do you have a copy of that advanced book, by the way? Do you want a copy of it? It's for the people in the live room. Okay, cool. So that's what I'm looking at for gold right now. Oil, forgive me, oil. Gold is a different beast on the daily. You're getting the fullness of my big brain. So Chris, we don't have Michael, you'll get it when you give me something. I will release the full force of the fountain. There's so much I want to give you. That didn't sound creepy at all. But in this instance, Chris, you can see that we're not reverse polarity, right? Everything is nominal. There's nothing at work here that is nefarious. So what I can offer you is open price lines. There's a feature inside of Warp that gives us support and resistance levels. And what we look for are the levels from the time signals extended forward into the future. And how many of those do I want to see? There we go. Let's project those lines 5 signals into the future. So when we're using time signals, you can do this on your 5-minute chart or on your 1-hour chart, it doesn't matter. Joe, do you notice every time signal gives us a horizontal line from the closing price of the time signal? This is something Gann observed over 100 years ago. He said, when you see the time cycles, you will notice resistance levels where tops and bottoms form around them. So, Chris, the last known level was at, let me blow this up. And that level was at, well, we can go right to the source. 2555.2, which is also a touch of the moving average. The next day is September 20th before we see any respite from this. The dollar is weak, is getting stronger and stronger. People are theorizing, market analysts, that people are moving out of gold into Bitcoin right now as the current administration is signaling, especially spearheaded by the influence of one Mr. Musk, that Bitcoin is the future. And so people will be pulling out of gold and moving into Bitcoin. So next jump, though, on the 20th, there are a couple of things we can surmise. Chris, there was a $78 move on the 14th. There was a $100 move on the 13th. There was a $120 move on the 15th. So if we were where we are now on the 20th, I would expect between a $78 move and a $120 move. If the 20th was today, I would be expecting the market to push up into that window, if that makes sense. Finally, the E-mini S&P. If we look at the standard default values, right, I'm not going to change anything. I do have a better value that I want to look at. Let's limit ourselves to the last 6 signals or so. And Chris, I want to just run this by you. Mr. Lydick, there are 2 possible split combinations between the 29th and the 17th. There is green on the 31st, red on the 5th, or red on the 31st, green on the 5th. Which one explains the polarity better, the first or the second? This is the second, and this is the first. What do you think, Chris? Does it work better if there's a green arrow here and a red arrow there? Or does it work better, the time puzzle, if there's a green arrow here and a red arrow there? This one, right? Yeah. Okay, so the reason that's important to me is because up here now, the anticipation would be a push down from the 7th until the 15th, if that makes sense. And then to verify that, I can run the splits in between here and see that we've dropped off of there as well. So these types of signals and reversals, the fact that we didn't come up here and break monstrous highs and keep going higher, tells me or indicates to me that we're moving into this pattern here. So this is a topping pattern, and the market tends to put in a distribution phase and then drop back down into normal polarity. The splits are reinforcing the idea that we're on the opposite side. And so the very first place we'd expect another push up would be, looks like the 15th. Tomorrow or Monday. Make sense? Yes, no, maybe. It's kind of a weird way of looking at it, but it's the most advanced way I know to analyze these markets like that. The other part of that too, Chris, is that that signal is a pattern 5. And pattern 5s generally predict what? reversals. That's right. So Chris, there's a book that you get. You actually have a copy of it in your handout section. When you arrive at a brand new structural high at a buy time, the market tends to reverse and go down. And so this is a 1-minute chart from 2016, where the kind of signal that we're seeing here on the ES tends to lose steam and go down, which supports our reverse polarity thesis. Yeah, right. So in terms of SR levels, Chris, we can come in here and also run a split between these levels. The first place you're going to find support is 59.60, 59.59. The next place underneath there is 59.15.50. And then the primary OPL is down here at 58.70 essentially. Yep. The open price line of the last pattern 5 is here, and that is 60.25. So the market's definitely closed underneath that. 1, 2, 3 candles in a row now. So the splits can be very predictive in terms of what is the polarity of the signals, right? That's something you can see play out on an intraday chart. We did it this morning in the room, Chris. You see how it came up at 11:05, Mike? That told me to look for a move down at 11:30, not up, and then up again at 12:50, and then down at 1:45, and then up at 2:05, and then down at 2:40. There's a button in your software if you don't want to watch for it manually called reverse polarity, rule 2. And if you get to that point, Michael, you can have the program tell you automatically where to watch for those moves. I can see it by eye now. If you're a customer and you want to learn more about polarity, I gave a course about it in April in the Edge event that we teach each year. And you guys are very welcome to listen to it. I would listen Monday AM and PM to start. And I'll put that link in the chat box. You got to download these videos to your desktop before you can watch them. Otherwise, it's only going to play the first 15 minutes. So if you're interested in sort of going deeper, Chris, those the idea of polarity reversing can be super powerful in a market and understanding when the signals are going to go in the other direction. And so I taught that course, and you guys can have it for free if you want it, no problem. Any questions about this? It's been a little, I tried to come in a little cooler today. I didn't want to be, I literally insulted, I think, a customer last week, and I think I lost him. And looking back through the lens, I probably could have been a little kinder and gentler. I don't think he was ever going to purchase, though, because he didn't believe it. And I wanted to sort of save him from himself. 60-minute chart, we mentioned it earlier, but Chris, remember over here? Michael, remember how I said when it breaks a white line in an uptrend, it's a signal of what? The trend dying. We used the word degrade. The move is degraded. We didn't make a new high, we made a lower high. So when you see that happening, the next signal is the most powerful, and usually right here signifies a trend reversal down. on the 60. The people who saw this before me, this guy right here, kind of moved the ball down the field back in the early 1900s. No computers, no calculators. And he did by hand what we're able to do with the click of a mouse. He said, time is the most important factor of all. Not volume, not price action, not support and resistance, not channels and candle patterns, time. And he really leans into that and gives us the formula for the algorithm that we're using, about 12,000 lines of code to generate the things that we're seeing. He says time is the most important factor when trading, second to nobody. And the key, the very way this program works is just a representation of his formula here. By studying the past records of the averages of these markets, you will be, so looking at, basically saying, if you watch the places where the market has been moving up and down, and you look backwards, Chris, Joe, into the past, Michael, you will be able to prove for yourself that history does repeat, and that by knowing the past, you can tell the future. He's saying, look, if you're just paying attention to what's going on back here, there are times that you can be aware of, and we can project those times forward into the future. The uncomfortable conclusion we come away with today is that if you did that, it still works. This was 1909 that he said it. And Joe, 125 years later, it still works, right? With all of the problems in the Middle East, Michael, the oil signals still work. It's working on a cryptocurrency that it has no business working on, because that's supposed to be open source and unregulated and completely random, and it's anything but. So was Gann right? Was I in the ballpark of correct? By studying the past movements of Bitcoin, you will be able to prove for yourself that history repeats, and that by knowing the past, you can tell the future. That's a $22,000 move. How big was the prior one? $7,500 move. This is a baby one. $2,000 move. There's a stop. You give back $3,600. Here's another one. $3,500 move. So I don't look at it in terms of what's the cost of the software. I look at it in terms of lost opportunity cost. If you're tired of watching those moves go and go and go, if you hear about NVIDIA, AMD, all these stocks where you're like, oh, I wish I could have known. You could have. You really could have. You could have been right there when the door opened with a small risk to see, is this going to be one of those $2,000, $20,000 moves? So all we do is apply what the guy said to watch for, and we've been doing it now for almost 20 years. This is what the original version of our software looked like. How many of you remember Flux? How many of you were customers long enough to remember what the Flux program looked like? It didn't have reverse polarity. It didn't have the patterns. It didn't have the open price lines. Chris does. 20 years later, it's a work of art. It's a refined piece of intelligent code that has a near perfect Trustpilot rating. For those of you following Pat's saga, he actually gave us an extra star last week. We've been working with him. He reached out for help, and we're giving him a hand, and we're back up there. 5 stars, 94%, 4 stars, 4%, 1 star, 2%. That's how you know we can't change those results. So we're doing something right. I think we're doing something right. The customers are doing really well with it. The company is backtothefuturetrading.com, and the program that we're describing is the one you need to get started with if you don't have it yet. It's called Tachyon Time Warp, and I'll put it in the chat box. This works for crypto, forex, stocks and options, as well as futures markets, whatever you have data for. You're looking at treasury notes and bonds, same difference. 60 to 70% of the time we usually see those moves at those points. There's a Willy Wonka golden ticket at the bottom. When you click it, there's this annoying pop-up that occurs. And that's our live advanced room. Today, if you were in my room, we literally bought, where was that signal? On the ES. It was a 5-minute, oh yeah. If you were with me in the room today, we bought it at the close of this candle. Do you guys remember that? And we sold it right here using the same techniques that I teach you guys. In that room, when we bought it here, I think we exited right there. It was a nearly $20 move. That's what the live training room is. I teach it. The signals you see, the charts you see on Thursdays are the setups that we're watching for in the room. We're using the program. We're learning new ways and methods to parse out things like polarity, lower risk entries, support and resistance, and trend. It's a community of users, and we have a Skype group actually just for those customers in that room. It's $200 a month. We have a $200 daily goal in the room today. I think we hit it in the first 5 minutes of the market open, pretty close to it. I think we were up $300 or $400. If you don't want that, no problem, but it's available. Some people like being in a market with the people who've made the program to sort of ask questions live. There's a promo code. Joe, here's your question answered. WARPOFF. WARPOFF. Whiskey Alpha Radio Papa Oscar Foxtrot Foxtrot. When you click apply, it takes $500 off the price. There are no hidden fees or ongoing maintenance fees as of now. So that means if you get it now, there's lifetime updates to the program. You get 2 computer licenses for NinjaTrader. You're going to get a video training archive that describes everything you need to know, broken up into nice bite-sized pieces. And then we also have a community of users in our Skype group. There's 335 of them there now. And the customers are sharing what they're doing and their results with each person, with each other. And so people are going to tell you what their setups are, what indicator they're using, what their signals and entries are in each of these markets. And they're more than ever sharing with each other what they're using to get in and get out. So this was a dream of mine, to get to a point where people were supporting each other outside of the principals here at the company. These are all people that aren't me. And so if that's something you're interested in and you want to be in groups of people that are sort of generationally beyond me, customers teaching customers, then now is a really great time to be a customer with us. WARPOFF, $2,495 US. You can also click checkout here if you're going to use a regular credit card. If you want to use PayPal or use PayPal credit pay later, you can do that as well. We do accept wire transfers, bank transfers. If you want to know more, you can email me. And I need to get you my contact information. No. Let me see if I can write that down where you can see it. We'll get it right here. So if you need to reach me, imagine that, somebody who does this and actually gives customers the information. It's Michael, Michael, at backtothefuturetrading.com, 336-703-7667. Joe, you said the CAD dollar isn't good. What's wrong with the CAD dollar? What's wrong with it? Oh, I'm sorry. The exchange rate. I thought you meant the. Um. Hey Joe, let me type something to you. Would that work? Just let me know if that would work for you. Okay. Yeah, I understand. Australia has the same problem. I never want to be an obstacle, bro. I want to find a way. If you're here today, the universe wanted you to be here. So I will, I'll let Rachel know to take care of that for you. Compose. Let me just verify. No, you're welcome. Copy your email. CONI. Okay, I just CC'd you. Thank you for your time here tonight. I appreciate everybody. Again, if you have questions, please email me or call me. And a final word, I am for you. I am on your side. I am a big fan. If you're here doing this, the hardest thing I've ever tried to do, I'm proud of you. You've heard deriding comments from friends and family members, the mailman telling you how crazy you are. You too, Joe, if you could let me know when you're going to do that by, it would help me out. If you could get it done today or tomorrow, that way I'll kind of have it off my mind and not wonder what's going on. But if you're here today, thank you for pushing through, for fighting through, for getting to here. You learned something tonight, and I'm proud of you. I want you to do better. I want you to have the things you want for yourself, and I want you to be the best trader you know how to be. This is my life's work. I've spent the last 20 years or so, day and night, watching this one blade of grass. The puzzle fascinates me. I'm hardwired to decode the puzzle. I'm also a pretty good teacher too. The two of those things together resulted in a near perfect Trustpilot rating, which is a unicorn in the trading industry. I've gotten over the fact that Fox News and CNBC won't be calling me. My purpose is, my place is here with you. And it really is a privilege and an honor to share what I've learned with the people the universe wants me to share it with. And so thank you for that opportunity. I get to do what I'm really good at every Thursday, and I'm grateful that you're here. If just one of you were here, it would make my night. So thank you. May the wind be at your back. May the sun shine upon your faces. May the valleys rise up to meet you. May the mountains lay low before you as you go forward. I wish everything for you that you wish for yourself: peace, health, prosperity, fellowship, friendship. All the things are yours already. Take them, grab them, believe it. Be kind to one another. That's my admonition today. All I ask in return is, if you leave here today and you're not a customer, please be kind. Extend the kinds of grace and kindness to one another this year coming up that you want extended to you. And I think we can make the world a pretty incredible place. And in the meantime, let's take a lot of money back from the banks, shall we? One tick at a time, everybody. Have a great night. I'll see you next week. Take care. Bye-bye.